morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. It's Friday morning and promises to be a green morning. I'm Neeraj Shah. You're watching Indian Open. Let's go straight to the headlines at this hour first. US Treasury Secretary Steven Mnuchin is back in Beijing to try and strike a deal with China to end the trade war. State Bank of India approaches Tata Group and TPG Capital to sell its stake in Jet Airways. That is a Bloomberg Quint exclusive. Accenture hikes its full-year revenue guidance after its second quarter performance surpassed analysts' expectations. And India's largest online grocer, Big Basket, is now a unicorn. And it's great to see unicorns pop up, isn't it? I mean, in India, we haven't had too many of them, but more and more get added to the list, and that's always a good thing from anybody who's watching the Indian economy. Okay, let's take a look at the trade setup for the day. The world markets were a happy place yesterday. The S&P 500, by virtue of the up move yesterday, is now headed for the best first quarter since 1998. That's quite something at a point of time when everybody's talking about slowdown being imminent. The world markets are a happy place. So good move in trade yesterday as well, accompanying what happened day before yesterday's too. And all of the indices marginally in the green. The fact that there is talks happening between US and China in Beijing also adding to that sentiment, and I think that's what's rubbed off on Asia in the session today. So if you look across the Asian screen, there is a rub of green and a pretty decent rub of green, I must add. About 0.75% for the Nikkei, 0.75% for Shanghai as well, and the SGX Nifty is showing a 1% uptick, 124 odd points. This is after a really strong session in trade yesterday, accompanied by flows, etc. So we'll talk about that, but this augurs well for our markets for sure. So strong day promised by the markets, and this is on the back of, as I said, a very strong day yesterday. If you look at what happened, the Nifty Bank, a strong trending day. That's the key thing. It was a trending day of gains. There was never a point of time wherein the Nifty or the Nifty Bank showed any signs of nervousness, and the intraday chart would have shown that it ended almost at the day's highs or in or around those days' highs. So that's what I mean by a trending day. No substantial falls, no nervousness throughout the day. We had an uptick, which is quite remarkable for a day like yesterday, which was also the expiry day. There was substantial cash market buying seen in some of the banking names in late trade. The last half an hour had strong upticks for a bunch of banks, and there was some serious cash market buying that we saw in trade yesterday. So watch out for the Nifty Bank today. I dare say watch out for Nifty IT. I mean, half the people were of the belief that the HCL Tech upgrade led to all of these stocks doing well, but maybe the index anticipated some strong numbers and guidance from Accenture, because the numbers were strong and the guidance, the uptick in guidance, and even the verticals where Accenture actually scored augurs very well for some of the Indian players, and we'll talk about that too. But I'm just saying that aside of while we keep on talking about the Nifty Bank, I think it's important to talk about the Nifty IT too. If both of these indices combine and do well, then you actually have a potent combination for a strong outing in the session today as well. So do watch out for this too. There was, as I said, a lot of flows that came into our markets in yesterday's session. The FI number was northwards of 3,500 crores. That's quite something, isn't it? And the last few days doing very well in yesterday's session too, a strong number. So two things that happened as a result of that up move. The Nifty PE ratio to the MSCI world PE is the highest now in over 2 months. So the markets have become a lot more expensive than what they were naturally so, because the index has moved up. We haven't had that change of earnings forecast because the earnings season hasn't quite come in as yet. And once this season earnings comes in, and then you have the forward estimates changing a bit if indeed the quarter is a good one. So that happens. Until then, yes, you would have expensive markets. In fact, on a TTM basis, the Indian markets are trading at some 25, 26 times. Of course, you don't look at trailing 12 months, but I'm just saying that this is very interesting, the valuation versus the growth conundrum that we seem to be hitting. So let's wait and watch what happens here, and I'll keep one eye out on the currency in the session today, frankly, because yesterday had a big drop in trade. Very nervous traders, as I spoke to a couple of them and read the social media from a couple of trading desks as well. Very interesting to see what the currency does in the session today. However, the key stocks to monitor on a day like this. I'm using the CLSA note on Indian IT on the back of Accenture numbers as a backdrop, but Accenture has signaled strong demand till end Feb, and the different verticals that Accenture posted growth in should augur well for Indian IT companies. So the likes of Tech Mahindra, the likes of HCL Tech, I dare say even Hexaware, because infrastructure management is a strong suit for Hexaware and HCL Tech. So both of these names, as well as Tech Mahindra and Infosys because of the US growth. So all of these stocks could be in focus today. Let's wait and watch if there is some more upside into some of the IT names in the session today. Data side, Wapco, the holding company to sell shares at about $136 per share. The deal is valued at about $7 billion. The acquirer will have to make an open offer for public shareholders. The transaction might be expected to close in early 2020. The pricing attractive. Let's wait and watch what happens to Wapco. SBI Life Insurance and yet another stake sale in the life insurance company. BNP Paribas seeks to sell about 5.1% stake in the insurance player for 575 rupees per share. This is as per Bloomberg News. Let's wait and watch if SBI Life has a bit of a pullback in the session today. And lastly, CLSA's note on Varun Beverages. They've maintained a buy, but they've hiked the target price to 1175 from 985. That's a really big upgrade. They believe that these acquisitions will drive the EPS by about 14 to 20% for calendar year 20 and 21. So do watch out for Varun Beverages as well. Interesting note out here, interesting rationale more importantly. Let's wait and watch what happens to this one. Okay, so those are the stocks to monitor, and Jet Airways, of course, will be a stock to monitor. In fact, that's the first piece on First Word today. Vishwanath Nair tells us why SBI is turning to the Tata Group and TPG Capital for its stake in Jet Airways. So that's the thing first up on First Word. Then Sajid Mangat Johnson to tell us why more than 600 foreign portfolio investors can't buy Indian equities here on. It's got a complicated name, but it's crucial for chemical makers like SRF and Navin Fluorine. Yash tells us what's changed for Fluorspar and what it means for these companies. And lastly, as we enter the last trading day of the financial year, Somit Sarkar Johnson will tell us how Indian equities have stacked up against analysts' expectations thus far. Lenders led by State Bank of India have reached out to two potential investors for Jet Airways. This comes just days after they took over control of the airline. Remember, the lenders are working on a strict timeline to exit their exposure to Jet. Vishwanath Nair reports.
Just days after taking over majority equity in Jet Airways, lenders led by State Bank of India are currently in conversations with two potential investors, US-based private equity investor TPG Capital, as well as Tata Group, to take over this majority equity that they hold in Jet Airways. Currently, lenders own about 50.5% stake in the company and therefore are in the controlling seat with regards to all the developments at Jet Airways. Only on the 25th of March did Jet Airways' board approve a resolution plan that was proposed by these lenders, which involved not only transferring this equity to the lenders, but also the ouster of Naresh Goyal, the founder chairman of Jet Airways, as well as his wife Anita Goyal from the board of the company. Naresh Goyal has also stepped down as a chairman of the company. There is an interim management committee at Jet Airways which is currently managing the day-to-day operations of the company, while lenders have also agreed to pump in about 1,500 crore worth of debt support on an immediate basis to take care of lesser payments as well as employee salaries which have been pending for many months now. Now, if either of these investors do end up coming into Jet Airways, remember these conversations are only preliminary, but if either of these investors come in, they would have to bring in about 5,000 crore worth of fresh capital into the company, which would include repaying the lenders for their 1,500 crore support, but also taking care of the capital shortfall of about 3,500 crore that exists at Jet Airways. Now, remember that the plan that is being implemented in Jet Airways has a 180-day deadline because of the RBI's February 2018 guidelines on restructuring loans. So banks have to either restructure the existing debt of the company or sell that equity stake that they're holding before that 180-day period ends by the end of June. Otherwise, the company will end up at the NCLT for insolvency proceedings.
Well, that's Vishwanath with that exclusive piece of news, and let's see if it has any bearing on Jet Airways today. I think news flow over the next couple of months will be fairly crucial for Jet Airways. Let's wait and watch if any movement comes about as a result of this. While the markets are good, it's not good news for some foreign portfolio investors. They've now been barred from trading in Indian equities. This comes after they did not comply with the market regulator norms, mandating that the end beneficiary of investments made through such a route be declared. Sajid Mankat is here with the details. Sajid, how many impacted? Why would they not have made the necessary disclaimers? What's the impact and the way ahead? Good morning.
Good morning. To give you a background, this entire thing comes in from not only the Companies Act but also from the PMLA, which is the Prevention of Money Laundering Act, where entities will have to and companies will have to come out and give out the beneficial ownership. So there was a April 2018 circular of SEBI which required beneficial ownership to be disclosed for all entities, including non-resident and resident NRIs and others entities, which came under so much of criticism that SEBI had to water it down in September. But then SEBI gave a 6 months period to adhere to the UBO, which is Ultimate Beneficial Ownership Guidelines. So March 28th was the deadline whereby when they should have all the foreign portfolio investors should have submitted their ultimate beneficial ownership for the funds or for the portfolio they are invested in. But what has happened is that on March 28th, nearly 600 odd entities have not provided a UBO guideline, UBO certification, or which is a KYC requirement which is there to custodians, as a result of which custodians have barred them from there. Now we understand from a lot of custodians that there are three buckets of FPIs. One is that there is a consolidation happening within the FPI. To give an example, like an Aberdeen has 350 accounts in India. So not all are active, many are dormant. So the Aberdeen may have decided not to go ahead with many of the accounts which are dormant because it increases to the compliance. Same is the case with PIMCO or for others, where we have seen multiple entities of PIMCOs also being listed out by the custodians as those who cannot trade going forward. Now so that's one category. The second bucket is disclosure of private details. In many countries, there are strict privacy laws, as a result of which individual details like name, home addresses, passport numbers cannot be disclosed. And those funds have taken a call that if it means that they have to exit India, they will exit India, but they will not disclose it. So those are just 25 to 50,
small percentage.
The 25 to 50 odd entities which are there. And the third one is the due diligence. People are still going through some of the due diligence there. The thing is that everyone expected SEBI to extend this deadline beyond March 20th. It didn't happen. So a lot of rush came into in the last week. Up till a month back, the compliance ratio was only 30 to 40%. So you can imagine in the last 1 month and in the last 1 week, the amount of paperwork would have come to the custodians, and they are in the process of doing it. And many of the custodians have been very categorical because it's a certification by custodians which have to be done and not regulator. So the custodians are very categorical that unless they get the beneficial ownership, they will not clear that FPI. And so there are many cases where the due diligence process is happening and is on the way. So these are three buckets where you have there. A large portion, I'm told, is the dormant accounts where they don't want to wait. So like a Janus, whose name is mentioned, or for that matter BNP, or for matter some of the PIMCO accounts, those are the ones where those were dormant and they don't want to take it forward.
Right.
So it's not money, because one thing is categorically to disclosed to us that these accounts doesn't have much assets in them. And even if they had been redeemed, and they are now empty accounts, so they don't want to increase the compliance, and that's one of the reasons why those names are there. So in 6 months time they will be knocked off from the list of FPIs automatically. And it's not going to impact them, because many of them have in the emails have told us that all their accounts are valid and they're trading and active and valid and trading. That's what they have been. So just it is a compliance issue which we are talking about.
Okay, just one very quick follow-up. If you spoke to lawyers who are into this business, did they say that this issue will tide over very quickly or no otherwise? And two, is there a way of figuring out how large? I mean, I'm guessing it's difficult, but is the sum of money that used to come in through these accounts very large, or is it very difficult to guess that or calculate that?
We have somewhere around 30 30 or 30 lakh crores of money which is in the country through FPIs, which includes equity, debt and other instruments.
Sure.
And 26 odd lakh would be equities, if I assume. This wouldn't be more than 20,000 crores or 60.
Okay.
So means it's not even means 2% maybe.
Okay, so it's not very large to cause significant gyration.
Yeah, it's not large to cause anything. Most of them may have debt. Equity may not be that much high in that. So it's not a big amount. The figure we've been talking about is $3 to $5 billion. But that includes all kind of instruments, whether it is equity or debt, and even that would be an exaggeration given the kind of response we have seen from some of the active FIs who are in the market. Because we have written to most of them who are there, and most of them have said that we are active and our accounts have not been. So those which are been named are dormant accounts mostly for them.
Okay, but an important move nevertheless, and one which may not have really big repercussions as of now, but a messaging any which ways, if not anything else.
Yeah, it's a messaging that we are now, you need to disclose your ultimate beneficial owner of any money that comes in. So where if it's a mutual fund, the fund manager's details needs to be here. If it's a pool of money, then that pool of money, who does it belong to? You have to disclose it. So those things are going to now take precedence over where the money is coming from. So Mauritius doesn't matter, or Singapore doesn't matter, or Luxembourg doesn't matter, because ultimately the beneficial ownership is available to the regulator, and that's what it matters, right?
Okay, great. Rajeev, thanks so much for putting that into perspective and giving us those details, but interesting pieces of news. As also, while bad news, as I said, for some money managers, good news for some specialty chemical companies. That's the third thing that we're doing on First Word today. Fluorspar is one key chemical used by at least two companies, SRF and Navin Fluorine, to produce a refrigerant used in cooling devices. So much so that this one raw material makes up for 50% of the costs. So no wonder that these chemical makers are happy that the prices have cooled off. Yash Upadhyay is here to put this into context. Yash, good morning. What's happened in Fluorspar? How big a overall component within the raw material basket is it for these two? 50%?
So basically, Neeraj, fluorspar is, like you mentioned, is an important raw material which is used to produce HFC refrigerants, which find application in air conditioning units as well as feedstock for pharma companies. Now, what we've seen recently on a year-to-date basis is the fact that fluorspar prices have corrected by more than 19%. They've touched the highs of $550 per metric ton at the end of the last year, and that has corrected by as much as 19%, now down to $421 per metric ton, which is similar or very close to the levels last seen in the same quarter of the previous year. Now, why is this important, and which are the companies that get affected by it? SRF and Navin Fluorine are both in the business of refrigerants, and close to 30% of both of their revenues comes from the refrigerants business. Speaking more about SRF business, the chemicals business is basically which houses the refrigerants business, and that has about 30% of its contribution to the overall revenues. In terms of the raw material expenses, the entire raw material basket or the raw material expense accounts for about 50% of its total net sales as of its latest Q3 numbers. And what we saw is that despite a 40% bump up in the revenues of its chemicals business, their margins, they came off by more than 300 basis points. In fact, they were down to about 13.3% in the third quarter of FY19. And this was primarily on account of the higher fluorspar prices, which I mentioned, according to most of the brokerages as well. In case of Navin Fluorine as well, 30% of their revenues, like I mentioned, comes from the refrigerants business, and that too gets impacted by the higher fluorspar prices. But they managed to take price hikes in the various businesses that they are in, and that in some way managed to salvage their margins, which came in at about 23%. That aided their margins to some extent. But going forward, while the price increase tends to happen with a lag, most of these companies have that kind of a pricing power to pass it on to the customers, and when the prices cool off, it is always an option with them to reduce the prices or to keep them at the current levels. So if the companies, and what we've understood from the Q3 con call of SRF management as well, is that they have guided for better margins, and that is on the back of price hikes that they would be taking in the refrigerant refrigerants business. Now, mind you, SRF is the largest manufacturer of refrigerants, and Navin Fluorine too provides cooling solutions to the likes of LG, Havells, as well as Blue Star. So these are some big companies which are their customers, and if they don't take price hikes, it would come and impact their margins. But with the fact that as the fluorspar prices have corrected, we could expect margins to improve at least in the coming few quarters.
Okay, so one, the price hikes were anyways going to happen. The fact that fluorspar prices have gone down, even if the price hikes don't happen in the same vein, the margin benefits could come in.
Exactly.
Okay. Now, viewers, sadly, Navin Fluorine or SRF don't really talk, so it's difficult to get a gauge from them as to what they're doing with the pricing in the first place. But maybe, as Yash said, at the end of Q3, the con call suggested the prices have gone up. Maybe at the end of Q4 con call, we'll get a better sense of what they've done too.
Absolutely.
Yeah, great. Yash, thanks so much for putting that into perspective. Pretty interesting. You miss out at times some of the nuances that have happened, but fluorspar, prices have cooled off, and that should only augur well for both SRF as well as Navin Fluorine. Watch out for these stocks. And the last piece on First Word today, the Nifty has gained nearly 15% in this financial year. In fact, the best monthly performance has been in March in the current fiscal. But the rally has not been broad-based. Sumit Sarkar has gone through the Bloomberg terminal to see just how many stocks tracked by 10 analysts or more, that's the base filter, how many stocks from this universe have managed to meet their target prices this year. And Sumit, the number is not very large or encouraging.
Well, yes, it is actually not encouraging, because if you see, nearly 4/5 of the stocks that are tracked by at least 10 analysts have failed to live up to their expectations. Now, we have compared the target price set by the analysts on the start of the financial year and the current one, and nearly 79% of them have missed their mark, which is the most in the last 7 years. Now, among the stocks that have missed the target by most, Navkar Corp tops the list. Now, at the start of the year, analysts had set a target price for Navkar Corp at around 229 rupees, but currently, if you see, the share price of the company is close to 40 rupees. That is nearly 82% below the target price. Now, this is because of a bleak outlook towards the container freight station industry, lower volumes, high interest cost, and foreign exchange losses that impacted the company's financials in this year. That has led to this fall in the share prices of Navkar Corp. Second on the list is DHFL, which is trading nearly 79% below the target price set by the analysts due to a liquidity crunch seen in the NBFC space and because of fraud allegations on the company. Third on the list is Skipper, which is trading nearly 77% below the target price. Now, this is because of slower project execution, slowdown in orders, higher raw material cost, which also impacted the company's margins in financial year 2019. Now, fourth on the list is Simplex Infra, which is again trading nearly 72% below the target price due to slowdown in execution and elongated working capital cycle of the company. While fifth on the list is Vodafone Idea. Now, this shares of Vodafone Idea are trading nearly 68% below the target price set by the analyst at the start of the year, and that is because of the weak growth seen by this company, also losses seen in the customer and the market share front, and because of a rights issue that will lead to a significant equity dilution for the company. Now, on the outperformer side, if you see, Bata India shares have rallied as the company witnessed a change in its revenue mix. Along with this, a lower input cost also aided the company's margin, and also a cut in the GST rate has increased the growth outlook for Bata India going forward. Second on the list is Adani Power, which is trading nearly 80% above the target price set by the analysts at the start of the year. Now, this is after the Supreme Court has allowed the renegotiation of power tariffs in the Mundra project that has led to this rally in the share prices. Then comes NIT Tech, which is trading nearly 56% above the target price. Now, this is on the back of strong revenue growth reported by the company and because of margin improvements. Divi's Lab, now that stock is trading nearly 42% above the analyst target price, and that is because of the outperformance seen and the strong traction seen in the CRAMS and the generics business of the company. Along with this, opportunities led by supply disruption in China also led to the rally in the share prices of Divi's Lab. Last on the list is Bajaj Finance, that is trading nearly 57% above the target price. And that is because of the strong AUM growth and the strong disbursements reported by the company despite the liquidity crunch seen in the NBFC space, and that's the reason why that stock is trading nearly 57% above the target price set by the analysts at the start of the year.
Okay, Sumit, appreciate it. Thanks so much for that. That's all that we have on First Word today. A quick programming note. We discuss markets and macros with Ganesh Ram Jayaraman of Spark Capital. Talk about opportunities and challenges for the consumption space with Titan, for Titan in particular with CFO S Subramaniam. And PFC has concluded its acquisition of REC. We speak to Rajeev Sharma of PFC about the next course of action. But after this break, a full tilt towards the day's trade.
Welcome back. You're watching Indian Open right here on Bloomberg Quint Live. Good morning, Neeraj.
Morning, Devina. Well, interesting day of trade today as well, because we had a fabulous day of trade yesterday, trending day upwards, and the SGX showing its hand already. And in all likelihood, if banks continue the outperformance of yesterday, Nifty IT has enough ammo in way of Accenture's guidance to do well. So you have the two big legs looking good at this moment.
Yeah, and as per the expiry that happened in a very strong fashion in yesterday's trade, where the banks actually made new life highs yet again. That steam, whether or not it actually could get tempered down in the early morning trade, because SGX is trading absolutely flat at this current point. So cues coming in from the rest of the globe. Asia is trading strong, but SGX somehow not matching up in the session. That's Asia for you. Nikkei 225, that's up about 1%. Shanghai is up 1.5%, and so is the Hang Seng. SGX Nifty, on the other hand, is trading absolutely flat with a slight negative bias. So may take a pause in today's session. It's going to be the first day of the new series of April. Volumes are going to be a bit more tepid, as it's the first day. But what happened in yesterday's session with regards to the expiry and how do things shape up as we moved into the next series, Agam Vakil joins in with more details. Agam, good morning.
Good morning. Well, for as far as expiry is concerned, the rollover stood at around 66% for the Nifty, and this was against a 3-month average of 62%. So we've certainly seen a considerable pickup in your rollovers for the Nifty. Well, in this point in time, the April futures looking at a 25% increase in open interest. Is the same for the Nifty banking futures as well, where your open interest is up as much as 79%. Of course, these numbers are going to look large considering we are heading into a new expiry, a new series. But the India VIX has come off by around 2.3%. Again, below the mark of 17, so traders can breathe easy in terms of expectations of volatility. What we've also seen is writing around the 11,500 put, and that also suggests that we're likely to see that as a support. And on the upper end, we're starting to see activity in 12,000. That is the level around which we are seeing a lot of activity with respect to options, so we'll be watching out for that. Look at this open interest distribution. 12,000 has the one with the maximum open interest, that is with respect to calls. So we watch out for that level, and the put call ratio, of course, is at a significantly high level at around 1.96, perhaps a little indication of being overbought. But Adani Power as the one which is the only one in the F&O band right now among other stocks that we're watching out for is Diwan Housing Finance. A lot of longs there, a lot of longs in India Bulls Housing Finance companies in general doing very well yesterday and advancing substantially with longs coming through. Dish TV offering some respite to a lot of investors who've seen a lot of volatility in this particular counter, also advancing in trade. And we have seen Bank of Baroda as one of the constituents of the Nifty PSU banking index, which has also moved up. Bank of Baroda moving up as much as 7%, a lot of longs building in there as well. So fresh buying seen. The real question is, can we expect some amount of profit taking as we move into the final trading session of this week, or can we expect a little more strength to come? Those are questions that will be answered eventually through the course of the day.
All right, Agam, thanks very much for that. So today is the final trading day. You'll get the weekly close as well for the Nifty. It's not been all that bad a week, but we'll have to wait and watch. March as a series was spectacular for the indices, where the Nifty moved up 7.5%, mid caps and small caps moved up 8.5%. But let's bring in Amit Shah, technical and derivative analyst at Bob Capital Markets. He's joining in right now. Amit, thanks very much for taking on the time. It was a very strong expiry that we saw in yesterday's session. Just as we step into the new series, where have the pockets of strength been seen based on the rollovers and the kind of open interest positions that we've been seeing?
Yeah, good morning, all. So definitely this March series had been quite interesting in terms of last 6 months pain, what we have seen since the time September series market started correcting. The rollovers had been quite subdued earlier, but now the March series, considering the FIs inflows and the overall rollovers, what it has happened, I believe April series is going to be interesting on the positive side. So if you look at the overall market-wide rollovers, it had stand out compared to the last 3 months. where the rollovers on the absolute terms stood at 88% compared to 86% the previous series. Similarly for Nifty as well as in Bank Nifty, if I look at the absolute terms for Nifty, the start of the April contract is going to start from 1 crore 81 lakh shares. Now, if you look at the overall average, on the positive side, there is room where the open interest base can be towards 2 crore 30 to 2 crore 40 odd lakhs. So this base has to just start building in. So I believe there is more room for 45 to 40 odd lakh shares which can be added in the April contract, and we will come slightly closer to that bullish kind of an open interest average during the April expiry. So that's a positive stance. Bank Nifty has significantly outperformed, as Neeraj likely mentioned. The open interest has almost doubled for the April contract. The previous base was 12 lakh shares compared to this month. It is going to start with 23 lakh shares. So definitely the Bank Nifty has seen more traction. Looking at the overall sector-wide, I believe banking, oil and gas can see significant outperformance, whereas metal and selective auto space can see weak kind of a rollovers, which they have seen weak kind of rollovers, and they will remain underperformed for the coming series.
Amit, just based upon the open interest distribution that we're seeing on the Nifty, it looks like the maximum call concentration lies at 12,000 now. So is that giving you a lot of headroom based on the kind of open interest positions? And on the downside, obviously, the first support falls in at 11,500.
Yeah, so if I look at combining this what open interest distribution you just mentioned with the technical formation what Nifty has constructed right now, definitely there is a very good support around 11,400. So any decline towards this, I will only treat it as retracement for the positive up move. The more it sustains above 11,550, 11,600 odd, there is possibility that market can head towards 12,000 odd levels on the higher side. So Bank Nifty has already confirmed a fresh high, but Nifty is yet to confirm and cross above 11,760, which is its all-time high. So I believe April contract, there is a lot more possibility how the first, 7-8 days spans out on the open interest front. But if that happens, then definitely we are poised for 12,000 mark in this series itself.
Amit, just wondering, yesterday's action in the banks, in particular the last half an hour, I reckon there was significant cash market buying that we've seen because volumes jumped up in those banks, price activity was seen and volumes overall went up in trade. FI numbers at 3,500 crores probably suggest that too. Are there those one or two banking names that are poised for gains over the next series?
Yeah, so there are definitely, if I have to pick up, say, two to three banks in the private space, I'll go with ICICI Bank. The stock has seen significant size of rollovers and good price traction. Just to give you a number, the base is going to start with 8 crore 63 lakhs compared to 8 crore 47 lakhs the previous series. DCB Bank has seen a substantial rollover with a price rise. The price has increased almost from 183 to 207 odd in the March series itself. And if you look at the open interest base, it is going to start with 61 lakhs as the open interest base compared to 38 lakhs. So this too, and along with can see a good momentum in Allahabad Bank in the PSU space. So that too has seen a substantial rise in the open interest, where the open interest base is around 2 crore 63 lakhs compared to 1 crore 92 lakhs the previous series. So there would be more of private banking space which will see some traction in terms of price action. Selective PSU banks will definitely support the overall Bank Nifty move.
Okay, so Amit, but leaving banks aside, if you had to play the next series based on the data available right now, which are the one or two best stocks, either on the long side or on the short side?
Yeah, so as I said, the oil and gas space looks quite interesting. So if I have to look at IGL, the stock has seen very good traction in terms of open interest as well as the volume which built in last 15 odd days during the March series. And if I have to look at the open interest also has surged to almost 35 lakhs compared to 33 lakhs and 28 lakhs the previous series. So definitely there is more traction. In the oil marketing space, look at IOC. the open interest has surged from 3 crore 39 lakhs to 6 crore 67 lakhs, along with a substantial price rise. So, oil and gas space, I will look at. My best bet would be IGL in this space. Apart from this, if I have to play crude-related stocks, I would go with Asian Paints and Pidilite.
Okay, Asian Paints and Pidilite. That's an interesting play. Remember, Pidilite has been soaring high of late, making new highs.
And Asian Paints is on his way there.
Yeah. So we've got a lot of this consumption play happening. Bata, in its own way, is already, it actually hit its
new highs. But continues to move up.
Yeah, continues to move up on almost a daily basis over the last few days. So that's going to be interesting to watch out for from this particular space. Amit, thanks very much for taking out the time. Appreciate it. Lots more stocks to talk about then, and as always, our research team is here with us. Take us through some stocks and news. We've got an interesting take on what's happening in the IT pocket, considering what Accenture has done in Q2, and also talk about brokerages on NBFCs with Shefali. But let's start off with Mishika first on some stocks and news.
Yeah, so the first stock we're looking at is WAPCO India. Its parent company says it's gotten into a definitive agreement to sell all of its outstanding shares to ZF Friedrich Schaffen for $136.5 per share, which aggregates to $7 billion. WAPCO India will remain in focus as ZF Friedrich Schaffen will have to make an open offer for public shareholders according to the SEBI guidelines. The transaction is expected to close in early 2020. PNB Paribas seeks to sell 5.1% stake in SBI Life Insurance at 575 rupees per share, reported by Bloomberg. Then we have the DLF QIP issue. Securities Issuance Committee approved the issue price at 183.4 rupees per share. The QIP was declared to be closed by the committee on March 28th. Adani Logistics arm will acquire 100% stake in Logistics, which is an entity controlled by private equity firm True North, for 331.5 crore rupees. This transaction will add 14 container rakes, one logistics park of 38 acres and 3,566 containers to acquirer company's portfolio. Tata Metallics issues 28 lakh shares to 34.9 lakh convertible warrants to Tata Steel at 642 rupees each. The total amount raised by the company stands at 404 crore rupees. After the issue of equity shares, Tata Steel's holding will increase to 55% from a current 50%. We're also looking at Fortis Healthcare. ICRA upgrades company's loan and fund limit rating to BBB negative from a B plus as per an ICRA release. Lastly, let's look at the important bulk deals. Morgan Stanley France SAS acquired 36 lakh shares, which is 0.69% of Indiabulls Venture at 314.5 rupees each. The seller was Merrill Lynch Markets Singapore.
Right, Mishika, thanks very much for that. Let's talk a little bit more about the very active NBFC space of late, Shefali, and what a brokerage is saying.
JP Morgan has put out a note, and it is saying that liquidity has improved slightly but still remains fragile, and the exposure to the lower rated segment that still remains a concern. Also the slowdown in the auto segment that we have been witnessing, and some of these high risk tier 2 developers, that is a bit of a concern, especially from the asset quality point of view. However, these risks are more balanced with the lower price to book valuations, which are at multi-year low, and the growth in the margin pressure that is likely to continue in FY20, mainly because of the higher funding costs. So that'll be a key monitorable from here on. They also expect NBFCs to explore more permanent solutions. So some of these news reports and the buzz that we've been hearing, with the likes of Indiabulls Housing Finance, etc., exploring merger options. So some of these may actually come true. In fact, yesterday I was just interacting with ERA that, some of these wholesale NBFCs have no option but to actually cut down their wholesale book. So that'll be something interesting to look forward to. So what they've done with the ratings, Shriram Transport Finance, they've downgraded it to a neutral rating versus an overweight call earlier, and they've cut down the target price to about 1400 versus about 1600 rupees per share. L&T Finance, again a downgrade to underweight versus about neutral earlier, and they've maintained the target price to about 130. Bajaj Finance, they think that is a more safer haven. So that one they're maintaining an overweight rating, and they've hiked the target price to about 3,400. So according to them, the rally may actually continue. HDFC is again a safe play. They're maintaining an overweight rating, target price hiked to about 2,300. Indiabulls Housing Finance, it's more of a high risk, but they're taking a bet on that, hence maintaining an overweight rating on the counter, but have cut down the target price to about 1,000 versus about 1,350. LIC Housing Finance, they're maintaining a neutral rating, and PNB Housing Finance, they're maintaining an underweight rating on the counter.
All right, Shefali, thanks a lot for that. Accenture Q2 numbers, a very exciting set of numbers that have. And it obviously lays the path for what we could expect from the Indian.
Yes, very surprising, very positive. So not only have these numbers come ahead of the guidance range, but also beaten street expectations. Or in dollar terms, a 5% growth, well, otherwise in constant currency terms, a 9% growth year on year. And they have also gone ahead and increased the guidance going ahead. So Accenture has raised its revenue guidance to around 6.5 to 8.5% from 6 to 8% for the full year. Of course, do remember they've just gotten done with the second quarter of their financial year, and they've raised their EPS estimates by around from around 7.18 to 7.32 to as much as 7 to 7.25. So, well, it's of course a big positive. Implications on Indian IT majors. When it comes to the US business, of course, positive for TCS, Infosys, and Cognizant. When it comes to acceleration in communications, media, and technology, a positive for Tech Mahindra, Wipro, and HCL Technologies, and of course the nature of demand with respect to consulting and applications, a big positive for something like an HCL Technologies and Infosys. So, well, implications in terms of the Indian IT is a positive one based on what we've seen in Accenture so far.
Okay, thanks a lot for that. So those are all the key stocks in news, and we'll talk about them fundamentally as well. Suffice to say that what Accenture's numbers indicate, or amongst other things, is that the expected pain that would have come in as a result of a lot of global turmoil, be it the trade wars, be it Brexit, that isn't quite evident to the IT companies as of now. I mean, we haven't heard from the Indian IT majors. We'll hear from them once the April and the May conversations happen. But I think that's the strong message that is being given out, that if everybody anticipated because of the global slowdown, a financial space will stop offshoring and Indian IT companies will be badly hit. Accenture's numbers don't quite show that. Yes, they would have gained some market share as well. That's what the brokerages seem to suggest. But broadly, this should be viewed positively for Indian IT companies. So,
most definitely, because considering that, post quarter 3, once the numbers came out, and while obviously IT did what it did on the back of the currency, expectations of growth were fairly tepid for the Indian IT space.
And it's showing the prices as well, right, Devina? Yeah. Some of these stocks did come off quite rapidly. I mean, it's not been a very great quarter the last 1 month.
Large cap IT still stayed a bit more resilient compared to the mid-cap IT stocks. Most of the mid-cap IT stocks had started to give way, in the last few months of trade. But let's see whether or not this quarter shows up any different in terms of the kind of performance.
Just the commentary, I mean, Mindtree is a separate case in point, news-based, but otherwise, as you see, most of the IT names, hardly any movement over the last 1 month, the last 3 months as well. So I haven't quite done well. Let's see if this kind of propels them fundamentally. But might be pertinent to talk about them technically first, since it's 8:45 and we should talk about charts and numbers. So let's first get that going, then we'll get into our fundamental expert on the show. Two experts to talk about derivatives as well as technicals. Shubham Agarwal, CEO at quantsap.com, as well as Rahul Randeria, independent market expert. Gentlemen, both of you, good morning. Thanks for joining in. Quick thoughts out here, Shubham. Before we get to IT, etc., would you take a fresh trade on either the Nifty or the Nifty Bank in the session today?
Hi, good morning. If you look at the overall placement of both the indices, Bank Nifty has done quite well, and Nifty is yet consolidating in the very, very narrow band. So I think once we have a breakout today, and that breakout should get confirmed if the spot level on Nifty crosses the 11,580 mark, because that has been the past couple of days resistance. And if that gets surpassed, which is very highly likely, I think a long trade can be built on Nifty, because Bank Nifty has already seen a very good performance, and now Nifty is about to cope up with that index. And the overall trend for Nifty seems to be very, very positive. And the previous swing highs, the all-time highs that we have seen on Nifty, it's a very high probability that we might go and retest that level. So if you look at the overall market breadth and the rollover figures, banking, cement, and some of the other sectors have been quite encouraging in terms of the rollovers. and I think the trend should continue. So I have a buy on Nifty above 11,580. The target will be 11,750, and a stop loss can be maintained at 11,480.
Rahul, good morning. What's your trade today? Would you be going long on any of the indices?
Yeah, good morning, Neeraj. If we look at the global setup, I'll just talk about first of all about the bond yields, which we have seen yield curve inversion the last couple of days. The bonds has been correcting for a very long period of time. Looking at the bond setup, France, UK, even US, it has come to a significantly low levels. So I feel that we could see a bounce back from those levels. So that would impact a sell-off or some sort of profit booking in the equities, in the global equities. Now, if we come to Indian markets, definitely in the last 6 weeks, Nifty has rallied from the levels of maybe 10,800 till the yesterday's high, which was 11,588, almost more than 755 points. In Bank Nifty, we have rallied more than maybe 3,600 points. Already the setup is overbought. Yes, Nifty is yet to cross its lifetime high, but before crossing that high, I feel that we could see some sort of correction, as I said, that because of the inverse relation between the bonds and equities. So looking at those setup, I have a sell call in Nifty as well as in Bank Nifty. One can sell Nifty on rallies to 11,618. My downside short to medium term positional target is 11,444, and my stop loss should be placed above 11,641, the spot levels. Same in Bank Nifty, one can go short on rallies to 30,619. Downside target 29,848, and stop loss should be placed above 30,776.
Okay, what about specific stocks? Now let me come to your ideas first. What are the two ideas for the day?
Yeah, I have two sell calls. First is a sell in Aurobindo Pharma. Last couple of weeks, stock has been facing resistance. It has failed multiple attempts to break the highs. So definitely we could see some sort of profit booking. So one can sell Aurobindo Pharma in the range of 769 to 777. Downside positional target is 736 with a stop loss about 786. My second sell call is in Escorts. One can sell on rallies to 800. My downside positional target 764 with a stop loss above 821.
Okay. Those are strategies from Rahul. Shubham has also got some stock ideas. He's buying Siemens and you're buying ICICI Bank, Shubham.
Yes, so two buy calls. The first one is on Siemens, and if you look at the movement there, the overall sector seems to be quite positive, and most of the capital good names have started moving up. And if we specifically look at Siemens, it's quoting at a 10-month high, and there's a good possibility of this move getting extended. So Siemens is a buy for a target of 1155, and a stop loss can be maintained at 1060. The second buy call is ICICI Bank. So we all know the Bank Nifty has been moving quite well, but ICICI Bank has just broken out from its previous highs yesterday. And I think that this move is quite encouraging, and this should continue given that 400 was a significant call writing area. And if that is getting surpassed, then gradually the market means that we'll see higher levels on that. So ICICI Bank is also a buy for a target of 425 and a stop loss at 390.
Okay, lots of those stocks to watch out for from our two technical experts. Well, before we get into a more detailed discussion as to what to do with today's trade, the government divestment in new financial year will begin with Rail Vikas Nigam Limited, one of the biggest project execution companies in the country. It will also mark the third listing from the Indian Railways stable. Samit Sarkar is standing by to run us through details of the IPO. Samit.
So the IPO is opening today, and the company is looking to raise close to 477 crore rupees from the primary markets to provide a partial exit to its promoter, that is the Government of India. Now at the upper end of the price band, the company will be valued at close to 3,960 crore rupees, and the price band is set at 17 to 19 rupees per share, and that is the total offer size, that is 477 crore rupees. Now the company is in the business of executing all types of railway projects, which includes new lines, doubling, gauge conversion, railway electrification, metro projects, workshops and bridge construction. So far the company has been awarded nearly 174 projects. So it's 174 projects that the company has been so far awarded, of which it has completed 72 projects, and the remaining 102 projects are valued at close to 77,504 crore rupees, and that's the order book of the company, 77,500, which gives the revenue visibility of nearly 10 years on for the company. Now if you see, so far the company has generated most of its revenue from executing orders on new lines and doubling, and if you see that's the revenue breakup of the company, it gets nearly 50% of its revenue from line doubling and it gets nearly 26% of its revenue from laying new lines. So that's the major revenue part coming in, and going forward also these two segments will be contributing the most to company's revenue, because if you see the company's order book, nearly 40% of the orders are from new lines, and the line doubling orders are close to 36% of the total order book, that is close to 77,500 of the company.
And how does this stack up against its peers, Samit?
Well, this company would have only one listed peer, and that is Ircon, which is again a railways company. And if you see over FY15 to FY18, RVNL, that is Rail Vikas Nigam Limited's revenue, net profit and EBITDA growth rate were far better than that of Ircon. Its revenue, net profit and EBITDA grew at a CAGR of 34%, 19% and 39% over FY15 to FY18. Now, Ircon's growth rate were a bit tepid because of a slowdown seen in the international orders from the company. Now, if you see on the balance sheet side, RVNL not only has a lower debt on its book, but its leverage ratio is also better when compared to its peer. Now, its total debt on the book is close to 2,259 crore rupees, while its total debt to equity is only 0.6 times as compared to 0.9 times of Ircon. Now, if you see the return ratios of both the companies, the return ratios for RVNL has not only improved compared to FY17, but are also better when compared to Ircon. Now, for FY18, RVNL's return on equity was 14.5%, return on capital employed was 6.1%, and return on asset was close to 6.6%. Lastly, on the valuations, if you see on the price to earnings, RVNL compared to Ircon is cheaply valued at around 7 times, while on EV to EBITDA, the issue looks a bit expensive at around 12.4 times, while compared to 7.3 times of Ircon. Now, price to book is similar for both the companies, and the market cap to sales is also cheaper when for RVNL. Lastly, if brokerages are also having a positive and a subscribe rating for this IPO on the back of its robust balance sheet, government focus on railway electrification, healthy order book, and an attractive dividend yield.
Okay, Samit, thanks so much for putting that into perspective. Do watch out for this one as well. You don't normally see IPOs from this stable off late, but this is an interesting one to monitor. But let's talk about the markets at large. As we said, the fundamental voice on the show, Devin Choksi, joins us right now. Devin, good morning and thanks so much for joining in. Appreciate you taking this time slightly earlier than normal. The flurry of activity in banks, Devin, what does it suggest? And we usually talk about the HDFC banks, Kotak banks, IndusInd banks. At this point of time, I actually want to talk about the other set, right? Yesterday, Central Bank of India, J&K Bank, the NBFCs like Diwan Housing, etc., all of them shot up in trade. What's happening? Is this a full-blown risk on in financials, or are there specific factors for the mid-sized ones to now start doing well?
Good morning, Neeraj. Well, other fundamentals being equal and not changed significantly in last few months, I would think that the larger part of the change in the market mood towards the BFSI space, in particular towards corporate banks, is also due to the fact that the allocation of money is happening in this space much more rapidly than otherwise. Some of the ETF monies which have come from the FI side, they've been looking for the businesses where they would invest with relative amount of higher confidence, and that's where they picked up this particular space, and in which the respective companies. So from a perspective of looking at what has changed, fundamentally, I would say nothing major has changed fundamentally. Yes, all of us are equally arguing for that if India is continuing to grow and probably grow at a faster pace than before, then in such situation, the banking space would probably have a higher amount of business to talk about, because corporate banks are continuing to record growth in the vicinity above 20% on the credit side. Plus, the revenue mix is also largely driven by the fee-based income, the transaction-based income that they keep on generating. So from a perspective of looking at the balanced portfolio within the banking space, the corporate banks fits well. At the same time, some of the corporate banks are due for monetization of the verticals that they have built within their own activities. And that's where you could argue for banks like Kotak, or for that matter IndusInd, or for that matter Yes, where the valuations are a little expensive at some point of time, but the fact is that they have the ability to monetize the verticals that they have built so far. So from all perspective, I see the justification in putting more money into the corporate banks per se. Public sector banks, except SBI, rest of the banks will still have to consolidate and then probably suggest that they could sustain the growth program that eventually I think meet them as far as I think the economy requirement is concerned. So let's see how PSBs work out, but I think the corporate banks would remain relatively more stronger, I suppose.
Taking a look at what's been happening to some of these oil marketing companies, and particularly the last series itself, the month of March wasn't all that bad. HPCL in fact moved up 22% in the series. So, keeping in mind that the stock is already moving out of the index. In fact, today's session is when the stock moves out of the index and Britannia comes in. Just the fact that we've seen a more stable crude price, Devin, would that encourage you?
Yeah, I think in a way it is good to see the stability in the crude oil prices, and probably I think that should allow most of the crude oil users, and the refining companies included, would find themselves relatively on a better track. Plus, I think if the crude oil prices are artificially tightened because of the supply curtailment, which is what is the anticipation currently, I don't think it will sustain beyond a point. However, as far as the market is concerned, I think market would play on every such opportunity, because I think it's more or less a trading market in many of the commodity companies, and that's where I think you are seeing at lower levels I think the buying emerging into those stocks. Many of the commodity companies have experienced I think the higher amount of fund flow once again into the sector, and that is also a resultant outcome into the better price behavior of the stocks in the marketplace. So I'm not completely surprised, though if you ask me fundamentally, I would probably still believe that I think the better play going forward would be Reliance and not OMCs. If you want to make money, probably I think better surety in Reliance vis-a-vis the OMCs.
Keep in mind the crude prices shrugged off the Donald Trump tweet quite effectively. I mean, one would have thought that with Trump tweeting what he did, maybe there could be some downticks, but no, not quite. They shrugged off. We're flattish, didn't rise, but shrugged off that completely.
Yep, and that's Brent crude for you at 68.25. It's been more about stability. Yes, it did see the best first quarter in 17 years with regards to crude oil prices, but so far the bigger move is not crude oil right now. It's a more stable move. The bigger move is definitely in the equity space. 30 seconds left to go for market pre-open. No major indications from SGX Nifty. The rest of Asia, though, is trading extremely strong. Nonetheless, despite today's position and today's trade, a weekly close for most of the Asian bourses may not be all that great. Today's session could actually have some bit of lending to making that number a little bit more sanguine. SGX Nifty there, 11,664 is where it's trading at. Market pre-open. On your screens, the Nifty 50 flat, marginally positive, and so is the case with the Sensex. New entrant, Britannia, should take that first and see how that's doing in trade this morning. And then we'll start off the others. So starts off positive, 3,140 is where Britannia is. This one comes in at a higher weightage than what HPCL was in the Nifty. The best performer though is Dr. Reddy's up 2%, Eicher Motors follows 1.9%, M&M 1.4%, Infosys 1.3%, Yes Bank continues, and this has had a really swell run. 280 now, I mean 300 probably looks like it could be a reality. You wouldn't have said that 3 months ago, but it really has got some steam. Tech Mahindra, IT as a pocket which was strong in yesterday's session, has maintained its gain. So Tech Mahindra is up about 1% We spoke about Infosys being up. The other stocks, including an HCL Tech, had a bumper move yesterday on the back of the report. ONGC is up 0.5%, HUL 0.5% as well. So a decent start, I would say. Not too many losers. The currency, though, strengthens a bit from yesterday's close, so 69.19 versus 69.34 in yesterday's trade.
Yeah, there was a sharp downtick in trade yesterday, despite the FI flows looking so strong, at least on the equity side. We'll get in an expert to talk about that, but just 2 or 3 names that I want to quickly highlight. WAPCO is all over the place, though. The expectations were that it will start off well, and that initial tick was a strong up move, but now flattened out completely in the session. Spark will flatten out too, but do watch out for these 1 or 2 names. Dish TV could be interesting. Had a big day in trade yesterday, big up day in trade yesterday. Let's see if that continues. For now, showing a 5% uptick. Watch out for some of the banks, the small size banks. They could be interesting in the session today as well. So that's the other set of stocks that you should monitor. Central Bank, or BOB, etc. All of these stocks were very, very active. And SBI Life Insurance, since BNP Paribas looks to sell about 5.1% stake at about 575 per share. This is Bloomberg News, of course, but maybe SBI Life could be under stress. Remember, this is one stock that had gone down and come back very, very strongly when the first deal happened. For now, looking flat. Let's see what happens. Incidentally, since we are talking about the currency and that small bout of weakness thereof yesterday, but the bounce back today, good to get in a quick perspective from Mr. Bhaskar Panda. He's head of Treasury Advisory Group at HDFC Bank, joins us right on the phone line from Mumbai. Bhaskar, good having you. Thanks much for joining in. Yesterday, a quick chat with some of the currency traders seemed to suggest that the markets were under some discomfort throughout the trading day and a sharp downtick despite flows looking strong. What's happening, and would you reckon that it was a temporary one-day factor that impacted the currency yesterday?
I think there were a lot of combination of things were happening yesterday. It's little unusual, if I may say. One is that if you look at the cash term or cash spot forward market was hovering. It moved quite a bit in a range of some 20%, which is very unusual. That is part one. Part two is that, yes, there was a lot of liquidity in the market, so it was, already, counted. Third thing is that towards the end of the market house yesterday, the Turkey news, came in and then I could see a lot of, unwinding of trade and dollar rupee going towards 69.34 yesterday. I think markets have now realized that the Turkey news is, okay, it has been digested. So they have come to a new normal. But having said that, I think even today also, if you look at the market, then they have taken into account the discount that was there yesterday in the cash spot market and had moved to the new level, which is above 69.
Okay.
I think markets are going to remain a little volatile, but in a broad range between 68.80 to probably 69.30 for some time now.
Okay, but no big gyrations you anticipate. I mean, the flows continue, so that should act as a buffer for any weakness, you reckon?
Yes. But one thing we all are forgetting, which we should keep a keen eye on, is the oil price movement. So oil price movement is being forgotten because we are getting good flows, but we should keep a watch on that.
Well, pertinent advice. If the crude prices manage to shrug off Donald Trump tweet, then that's something to ponder on. Mr. Bhaskar Panda, thank you so much for taking the time out and joining us for this quick perspective. Appreciate your time.
Thank you.
Well, let's wait and watch what happens there. It's an interesting bit. If and when the ETF flows stop, because you would reckon that this nature of the flows are ETF flows, then what does the currency do in light of what crude has done? I think that's an important monitorable too. But since you're on the topic of currency, just a quick perspective, Devin Choksi, from you on what do you make of the movement in IT and the Accenture guidance impact on IT names. Infrastructure management did very well. I would reckon Hexaware, HCL Tech right out there. US did well. Infosys out there. Tech Mahindra augurs well too. So a lot of stocks that could do well. What do you watch out for on the back of the guidance rise from Accenture?
Well, I think I would probably look at Indian companies relatively differently. The TCS and the Infosys, they have been winning some of the larger contracts in successive quarters, and I think at a run rate of around 20 contracts in a year for TCS for above $1 billion customers. So from that point of view, I think this is an important time that they are entering into. Probably they worked hard for changing their business model to cloud computing, AI framework, ML framework, and I think getting into the applications which are basically driven under the new generation of connectivity, which is 5G. So from that perspective, if you look at it, I think these companies are well geared up. The business model remains, I think, steady. I wouldn't call it, I think they are going to remain operate, I think, at an exceptionally high rate of growth. Probably, I think, between 10 to 15% rate of growth. I think if they end up operating at a higher base, I think it would be a decent rate of growth, I think, for these two companies. The mid-size IT companies which are specialized and are niche players, I think in respective segment, like say for example companies like Tata Elxsi, I think they are relatively on a higher growth trajectory, and that's where I think you probably want to buy an argument that in any kind of a corrective downside in the market, they remain probably I think one of the best picks in the marketplace from the investment point of view. But don't expect I think superlative return. I think if you end up getting from the lower base of the price during the corrective downside in the market, a return of around 15% around, I think that would be I think a decent rate of return that should be considered for investors who are investing in the IT space.
All right. It'll be interesting to see whether or not trading opportunities can be seen within the IT pocket, since over the last few days there's not been that much interest versus what banks have done, though yesterday you did see a big move coming into IT. Shubham, would you be a trader on any of the IT names?
Yes, absolutely. If you look at the IT index, it was in a symmetrical triangle and forming a kind of a bottom. And yesterday we have seen that a lot of names have now started moving up. So I think the sector, the retail series can do really well. And one of the top picks from that space will be Infosys. So if you look at Infosys, the consolidation seems to be mature enough. And we had a candlestick pattern which is called as falling three, and after that we have seen a breakout happening in Infosys. So this overall setup seems to be very encouraging. So I would recommend going long on Infosys, not from a trading perspective, but more from a positional trade standpoint. And the target for the same will be around 775, and the stop loss can be maintained around the swing low of 720. So the sector looks positive, and Infosys will be one of the top bets from this space.
The other one, like we spoke about, we got a fundamental call, but Rahul, on HPCL, the stock obviously is moved out of the index today, but the historical data shows that once the stock moves out of the index, there is a tendency to do better. The stock has already done 21% last month. Is there more room left?
See, last couple of days means already last 5 days it has been trading in a band of 280 and 266. So I will be waiting for the either side to be broken out, and once it breaks up on the either side, maybe if it breaks 280, one should go aggressively long. If it breaks 260, one should go aggressively short, because last 6 days it has been moving in this particular band. Yesterday was an expiry and today is a new series, so definitely I will wait out for that particular point to be broken on the either side and then take a call.
Quick 30-second view, Rahul, on Britannia, the one that comes into the Nifty.
Yeah, as you rightly mentioned that yesterday we have seen in the last fag, we have massive volumes in Britannia because of this adjustment in coming into Nifty, and it has formed a long-legged doji with a very long shadow on the downside, which indicates that the strong buying has seen because of inclusion in the Nifty. Slowly and gradually, I feel that the consumption space would perform in the coming days. So definitely for short to medium term or short to, if anybody wants to invest for maybe 2-3 months, one can buy Britannia at current levels, which is 3096. Even if it corrects to 3050, one should accumulate. On the upside, I feel that stock has potential to test the levels of lifetime high in long run, but in short to medium term, it can test the level of 3320. One should place a stop loss below 3000.
Okay, stay on, gentlemen. Minutes away from market open. Let's tell our viewers all that they need to know to stay ahead in trade today. First up, the consortium of lenders to Jet Airways, led by State Bank of India, have reached out to US-based TPG Capital and the Tata Group back home for a potential investment.
Britannia will replace HPCL in the Nifty 50 today. Britannia will become the only the third FMCG stock on the index after heavyweights like HUL and ITC.
Watch out for IT stocks in trade today. Accenture has posted steady Q2 earnings and raised revenue guidance. This is a signal of strong demand for the 3 months ending February.
Government divestment in the new financial year will begin with Rail Vikas Nigam Limited IPO, which opens for subscription today. This marks the third listing from the Indian Railways stable.
BNP Paribas seeks to sell 5.1% stake in SBI Life Insurance at 575 rupees per share. That is a Bloomberg report.
WAPCO India's holding company to sell stake to ZF Frederick Schaffen for $7 billion in deal expected to close in early 2020. Shares to be sold at $136.5 per share.
And it's had its impact on WAPCO India, the stock as well, 6.5%. The deal at a premium. The stock has not really gained as much as the entire premium amount would be, but there is an uptick in WAPCO for sure in the session today. Deven, any thoughts here?
Neeraj, I feel that I think WAPCO has a history of having worked with ZF in past also, and both these companies have developed a good amount of synergy between them. So I do not know, I think, how the compatibility across the geography will happen, but I think if you see the European geography per se, I think coming together with these two companies makes a lot of sense, because on one side I think we are seeing the commercial vehicles, I think, going into the autonomous driving space, and on the other side I think WAPCO's own dominance in this particular area of technology is basically suggesting that both these companies would have the purpose to meet in far as the technological developments are concerned. And plus, I think the cost of development, I think, which could possibly funded significantly by ZF in this case, I think could probably make a win-win combination. So it would be an exciting time, as I suppose. But let's wait and see how the further clarity comes in. Maybe we'll be attending the con call today to get, I think, further more clarity on this subject.
Devin, any other piece of news? 1 minute, we're very close to market open. Anything other piece of news that has caught your attention and would have an impact on a particular stock?
I don't know, but I think the way in which I see the rollover which have happened in the market, I think the month of April and month of May are likely to be, I think, a good momentum months, I think, as I see it. And without applying too much of mind on the subjects, probably I would like to buy into some of the large cap companies where they would have significantly higher importance or the weightage on the index as well. So likes of Reliance and some of the corporate banks, I think, would be my preference to put money into in this momentum driven market for the time being.
Great. Devin Choksi, appreciate you taking the time out and joining us today. Many thanks for agreeing to this interaction today. That's the view from Devin Choksi of KR Choksi Securities. Well, a lot of people have said this. The post-election rally will now happen pre-election, and we've seen signs of that already. 11,625, kissing distance from all-time highs as well. Let's wait and watch as and when, and if and when that happens. But less than a minute left for the markets to kickstart trade. Quick trading ideas from our expert. Shubham, your top call for the day today, 20 seconds.
I would go with BPCL. So if you look at some of the oil marketing names, I think BPCL is good place. So I would recommend a buy. It's a conditional buy, that buy above 390 if we see a breakout today. The next target for intraday perspective will be 398, and a stop loss can be maintained at 385.
All right. Let's get in the top call from Rahul as well. Rahul?
For today, I have a buy call in ITC. Target would be 307, stop loss would be 296.
Well, 15 seconds left for the markets to kickstart trade. Let's look at how the markets kickstart and then figure out what to do based on the advice from our technical experts. But this is how the markets are starting off. 0.5% up for the Nifty, the Sensex about 1/3% or 0.5% too, and the Nifty Bank about 55 odd points. So interesting start. The banks are not as supportive, so maybe IT has done very well for itself. The mid caps and the small cap should come up on your screen as well. About 0.5% for the mid cap index, small cap index about 1/3%. So good start for almost all of the key indices, but for the banks, and which maybe means that IT would have done well. Let's just see what's happened. No, actually, we don't see too many IT names out there too. Oil and gas seems to be doing the bulk of the heavy lifting, because oil marketing companies, Reliance Industries, ONGC, all of them in the green. So not a bad start. Though I must say, IT has made its presence felt. Tech Mahindra and Wipro, at least a couple of those, are doing rather well for themselves. Not too many other stocks which have had a big move. Indiabulls Housing Finance, the top gainer in yesterday's session, is the top gainer in today's trade as well. About a couple of percentage points. What's not done well? Well, IndusInd Bank amongst other stocks that has not done well, but outside of that, seems to be an okay start to the trading day today. Nifty Bank marginally in the red, mind you. What about specific pockets of strength and weakness at the broader end of the spectrum? Let's get those stocks going just for a brief moment before I hand it over to Devina for what's happening across the spectrum. Firstly, stocks that did are very close to their new highs. So Bajaj Holdings, yesterday that big sharp uptake, today cooling off a little bit but trading around the new highs. Credit Access Grameen 0.5% and Bata 0.5% lower. So no big movement in the stocks which are trading around the new highs. What about some of the banking names which had action in trade yesterday? J&K Bank 1.5%, Central Bank 3.5%, BOB about 0.25% higher. So the banks continue to rise and shine, even though at least the mid-size banks continue to rise and shine, even though the Nifty Bank is now about 61 points in the red. So that hasn't had a great start today. Devina, what are you spotting?
Well, you mentioned a few of them. WAPCO, for one, that's the top gainer on the Nifty 500. Vodafone Idea, that's up about 8%. You've got MTNL, which has moved up 7.5%. Schneider Electric is up 4.5%. That moves in the session. You've got a Central Bank of India, Varun Beverages, HPCL still does okay, and 4% higher in trade today. Dredging Corp, Divan Housing Finance takes the move forward from yesterday's session, about 2.5%. Dilip Buildcon, that's up about 2.5%. PNB Housing Finance, you've got NMDC, Indian Oil, Federal Bank looking strong, 1.5% higher. Heidelberg also makes a good, decent move in today's session. VIP Industries, that's at 490 right now. So big moves coming into some of these names. Broader market move is definitely better off, and you can see that in the market breadth, which is 811 stocks advancing versus 268 stocks that have declined. Vodafone Idea now is up 13%, so that looks like an interesting play.
Okay. Rahul Ranira, quick opening thoughts. Anything that you would buy? Okay, Vodafone Idea, since we are on the topic of that, 12% higher. Any trade here?
Yeah, it has been into oversold territory, so we could see a technical pullback, but no major trade I am seeing as of now.
Okay. Great. Rahul, good having you. Thanks much for joining in and taking the time out. Really appreciate. Shubham, quick opening thoughts from you as well. 0.5% higher for the Nifty. Any trades there on the index or any specific stock that you would like to trade?
Yes, so if you look at the Nifty has already broken out from this consolidation that we were witnessing. So I think the target for 11,750 remains intact, and this rally should actually be used as a buying opportunity. And if I have to choose one of the name after the opening today, I think I would go with Jindal Steel and Power. So if you see there, the consolidation was intact for quite some time, and today we have an encouraging move in the opening bell. So I think that could be one of the stocks for the day. So I would recommend buying Jindal Steel and Power for a target of 173, and this is mostly an intraday trade, and a stop loss can be placed at 167. So Jindal Steel and Power is a buy from my side.
Okay. We'll leave it with that, Shubham. Thanks so much for taking the time out and being with us today. I appreciate your time. Okay, let's get in our next fundamental guest on the show, Ganesh Ram Jayaraman. He's Managing Director for Institutional Equities at Spark Capital with us in our studio. Ganesh, good having you. Thanks much for joining in.
Pleasure's mine.
Even if you anticipated that there will be a pre-election rally, did you anticipate it to be of this nature? And do you reckon that it's now run its course, or can it do more?
See, obviously what's happened is expectation of a stable government. And but our assessment over the last 18 months has been that there are fundamental challenges still, and that does improve if India gets $25 billion of flows in, say, the last 3 months we have got about 10. If that stays and we get another $15 billion over the next, say, 3-6 months, and if $25 billion come into India, it does change our fundamental challenges. Because if you go back to the last 18 months and understand what really were the challenges, then you realize that there were a bunch of issues which were led by liquidity falling short of what is needed to fund our growth. And liquidity fell short because of multiple issues. One, there were FII outflows. Second, the currency in circulation went up sharply. So the liquidity, the deposit growth fell behind credit growth by almost 500 basis points, which means there isn't much money available with banks or in the system as a whole to fund the growth requirements. Government is borrowing, private sector needs to borrow from banks. NBFCs were also growing aggressively. So there was a liquidity issue. But at the margin, if we get $25 billion inflows and that stays put, it does change our dynamics.
What do the conversations with investors suggest? Are they sanguine about putting this money? Because whoever we spoke to thus far seem to believe that this is ETF money and not necessarily long-only money that is coming. So my question is, how strong is the belief that we will get the kind of money that you're talking about?
The nature of money is, you're right, about how it's been more ETF-led, but the color of money is same, okay? In the sense, it starts out as one, it goes into something else, but at the end of the day, if the fundamentals improve, money will come back, okay? And we are staying cautious still on that. Our assessment is that we are still in an earnings downgrade cycle. If you go behind and ask management, in terms of what's really the challenges that they are seeing currently, 2-3 things come out. One is the leverage-led demand, the interest rate sensitives, autos or real estate, that's still a challenge. We are seeing earnings downgrades there. Second is premiumization is being tested for the first time in many years now. What we are seeing as data, what we are seeing managements tell us is also that consumers seem to be beginning to downtrade, which is vis-a-vis buying higher priced products. They seem to be choosing to buy something lesser priced. Or the nature of customers who are driving growth are in the rural areas, are in states where the per capitas are lesser. So it's the average selling price is trending down. In some form, the demand is being drawn by bottom of the pyramid.
This is in staples or this
is largely in anything called consumption, discretionary or even in staples. We are noticing this pattern change for the first time in many years, and that our assessment is not baked into estimates for fiscal 20. Secondly, the fiscal math is not looking very healthy. Our assessment is government expenditure, especially capital expenditure, is likely to become more impacted. States and center, not only state and central government, but also the government bodies. You know, the National Highways Authority of India or companies, or they are not companies, nor does it form part of government borrowing. It's those quasi bodies. Cumulatively, their growth over the last 4 years was about 20% CAGR. Okay. Now we are seeing that beginning to moderate. Direct tax collections are a bit less than expectations. Indirect tax collections we know. So there could be fiscal challenges, and that could also have an effect on how much growth is being driven by companies dependent directly or indirectly from government expenditure. Directly is easier. No, it's the cement companies, construction companies, fertilizer companies. But the indirect effect is almost impossible to model. Okay, where does having a road, okay, if a road is built, we know the prosperity of a village around it improves because you are giving it access to more markets, the value of the land around it go up, that gives a wealth effect. So the indirect effect of government expenditure moderating, we call it multiplier effect, but that's more a parlance we use in economics. But broadly what we call is the impact of government expenditure moderating is something that we also see effect likely to play on earnings. So our concern still is earnings expectations, cash flow expectations for next year is something that we see moderating. For example, if you see current FY19, well, earnings growth looks like it's going to be mid-teens. Operating cash flows growth could be low single digits. So what's the reason? Companies are keeping the channels stuffed up. If the growth doesn't pick up next year, eventually the channels will not be comfortable taking more inventory, so that will lead to moderation in growth. Now all of this can at the margin improve, okay, but we need to wait and watch. We are not in that camp which is opening the sluice gates for saying everything's improved and let's now go and buy back everything which we bought in 13 to 17. No, we are not in that camp.
The other point being, obviously, you touched upon the flow of money, and ideally in an election here you would see the money coming in. We've seen past election years, 2004 saw a lot of money coming in, 2009 saw closer to about 83,000 odd crores, 2014 saw 97,000 crores coming in from the FI desk. So far, year to date, we are already 40,000 plus in terms of the money that's come in. Do you see that the continuation of that pace of money coming in and the post-election rally that generally people anticipate?
Sure. Generally, a lot of flow tends to come in the lead up to elections, and we have seen it this year as well. I think it will be more fundamentals, more earnings expectations, which will drive flow subsequent to elections after the noise subsides. But when we speak to FIs and when we ask them, what do you feel about India? it's valuations which they are most concerned about. We are decisively ahead of competitive countries in terms of the valuation multiples that we trade, and that's a material pushback. And funds tell me, I cannot convince my intern investment committees to put investments into a stock at 35 PE when similar companies, possibly larger, not too different on growth or margins or return on equity, are at half that multiple in other countries. This is a key pushback. Having said this, they all understand the structural story and they want to be part of it. And even recently we met funds who said they have cut their underweights on India. But they are not in a mood to go back to material overweight stance. That's not the sense which at least we are getting.
The other part, obviously, to the theory that we are seeing stretched valuations in some of the specific sectors. Where we're not seeing stretched valuation, in fact, where we are seeing depressed valuations is the broader market space. They're trading, 41% of the stocks in the broader market space are still trading below their historical PEs. So would that lend an opportunity according to you? Or because even if you have to consider a tactical approach where there is always been a mid-cap rally post the election results being announced, heavy gains of almost 40% plus in the mid-cap space.
Yeah. See, we don't look at life with elections being the key trigger.
No, that's just a tactical.
Yeah, I mean that will lead to flows is a function of fundamentals. So we always go back to ask ourselves, are the fundamentals changing?
Yeah.
Is there cash flows improvement? Is cost of capital heading down? Are earnings getting upgraded? And that alone we believe flows might come in the expectations of a lot of triggers, but for it to stay put, it needs fundamental drivers, and that's the key point. And
is that improving for mid-caps?
We have not so far got confidence. But having said this, let's go back and ask: Do markets drive the economy, or does economy drive markets? It's actually a bit of reflexive action there. Okay, if we get $25 billion of flows, that at the margin improves fundamentals. And if that stays put, and if fundamentals improve, that improves flows again. So there is reflexivity in that action. So we need to. This is a little difficult time. There could be, in our assessment, if those flows are going to be temporary, these fundamentals don't change. So we are believing in that camp still, and we believe that a portfolio led by quality companies, what we call as all-weather managements, time-tested track record, across cycles, that it needs to be a large portion of our portfolio. We also think it needs to get balanced because things can improve. You don't want to be owning just the best managed companies because they are really expensive. The way we are recommending to clients is balance it with what we call as value, which is structurally good, cyclically challenged companies at very attractive valuations. While I can't talk real stocks out here, but what we say is some corporate banks, there are some stocks which are state-owned companies in various sectors. So our portfolio bias has shifted from being very defensive, quality focused for the last 18 months to being more balanced towards quality and value. What we are not recommending still is to buy the growth stocks, the cyclicals, which are more of fair weather companies who do well when there are tailwinds. These are companies in NBFCs or cement or industrials, the construction companies, oil marketing companies, or even the leverage-led companies in automobiles, or not the leveraged companies, but I'm saying companies who depend on consumers taking leverage. So we are still shying away from recommending growth stocks, which we believe will see earnings downgrades, multiples downgrades. But balancing them with quality and value has been our recommended strategy.
Okay. Well, we speak to quality and value up next. Ganesh, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time. One of those companies in that bucket hit the 1 lakh crore market cap yesterday. We speak to the management of Titan about the opportunities and challenges that Ganesh was talking about as well. The CFO S Subramaniam Johnson right now on the other side of the break, of course. And then have a conversation with PFC on the conclusion of the acquisition of REC. Rajeev Sharma Johnson to talk about that. Stay tuned to Bloomberg Live.
with Indian Open right here on Bloomberg Quint. Titan has achieved a unique feat. It's a selective feat, let me put it that way. The company hit the 1 lakh crore market cap mark yesterday. The country's largest organized jeweler has been one of the biggest beneficiaries of the structural changes towards cleaner accounting in the jewelry segment. What's also helped the company is healthy growth in the other segments like watches and sunglasses largely. But with elections around the corner, will uncertainty create a minor disruption? Will the global growth coming off have an impact on the demand momentum as well? Let's ask all of these questions to Mr. S Subramaniam. He's the CFO of Titan, joins us right now on the show. Mr. Subramaniam, good having you. Thanks so much for joining in. A few companies show growth consistently over the years and the markets reward them proportionately. I guess this 1 lakh crore market cap is a testimony to that. So in that sense, congratulations to you.
Thank you.
Just wondering, what do you feel of the environment right now, Mr. Subramaniam? A guest who was just talking to us before we start this conversation with you was speaking about how the consumer in India is, for the first time in many years, looking to downtrade. And he cited companies across the consumption spectrum when he spoke about that. What's your sense for your business and for businesses at large? Do you see this phenomenon starting?
I think we are hearing similar noises as far as the consumption is concerned across the board. But I think I would restrict myself to the segments that we are in. And the biggest one, of course, is the jewelry segment. And our information over the last year and a half too, and even in the near term, has been that the industry has been struggling to grow. A lot of jewelers are facing trouble because of the financial squeeze, liquidity squeeze, and so on and so forth. At the same time, high gold prices are also inhibiting customers from buying more jewelry. Of course, the wedding season is on, so people are buying jewelry for that. And our estimate is that wedding jewelry would cater to around 60% of the total jewelry demand in the country. So to that extent, that remains fairly inelastic. But what tends to happen is when prices are high, I'm talking gold prices being high, people tend to shift their purchases to a later date till they actually have to buy it for the event. Therefore, there is always a lag in purchases, and that's something that we keep seeing whenever gold prices are deemed to be high. I think that's not an exception now as well. So the industry is going through pain. Titan per se we've been doing quite well, I should say. Our market share gains are continuing. Everything that we've been doing over the last 2 years are yielding fruit. And of course, the tailwind that we get from the regulatory interventions are also helping companies like us quite well. So it's a tough market. It's tight. I think we are holding on to our growth.
Somebody made the point, Mr. Subramaniam, I'm drawing a parallel out here, that what the Nifty does need not necessarily be true for the economy at large. And therefore, my question would be, what Titan does, would that hold true for the space at large, or you would continue what you are doing irrespective of what the space is going through?
I think that's the plan. Yes, I think we would just do what we have to do. In fact, this is something that we talked about even 3 years back when we saw that the growth in the industry had slowed down significantly. If you realize up to 2012-13, gold prices were going up, and therefore there was a tailwind. The jewelry industry was growing at a very, very fast clip, possibly double-digit plus. But post that, gold prices have been volatile, and therefore the growth of the industry per se has slowed down significantly. Therefore, we realize that the only way we can grow ourselves, if we were to grow at something like 15 to 20% at least CAGR, we need to start gaining market share. And that is why 3 years back we looked at wedding jewelry, high value studded, and various aspects like that. And also the network rollout. We said we need to be far more aggressive in the network rollout now than we have been in the past. What's been helping us is a lot of the formalization of the economy as well. That's been helping us. But a lot of the initiatives that we've been putting together over the last 2-3 years and executing And I think executing well is what is paying dividends now. So we therefore expect, we are planning to grow despite a slowing down in the industry by just focusing on our initiatives that we've stated in the past.
Mr. Subramaniam, in light of what you just said, so what is the target market share going to be for you? What is the trajectory of growth in order to gain that market share going to stack up for Titan?
See, when we talked about the 2.5 times jewelry numbers, revenue numbers over the next 5 years, we ballpark, we're looking at something like a 10% market share. Assuming that we will be growing at a CAGR of around 20% and the industry may be growing at maybe 5%, 6%, and so on. So that, if you look at mathematically, would be right. So if you ask me, that is a target. Whether we achieve depends on how we execute.
Will that include changing the mix in terms of contributions coming in from segments like watches? You're looking at wedding jewelry, as you just pointed out. Does that start to increase and contribute more to the overall jewelry segment, which is about 83% of your revenues?
Well, I've been talking about jewelry here. That 2.5 times, etc., I talked about was the jewelry part. Whereas we also have stated a 50,000 crore consumer revenue, price revenue, which would effectively mean something like a 40,000 crore revenue that we show in our books over the next 5 years. So that of course takes into consideration the growth that we expect in the other divisions of ours as well. Watches has been doing very well. We've turned around the corner very well. We're looking at decent EBIT margins, and importantly, growth has been good for us. Eyewear this year has been a very good turnaround story in terms of growth, and we expect to be investing significantly in the years to come so that we keep up with that growth. And therefore, yes, one is hopeful that if we just execute as per our plans, we should get to that number more or less, yeah.
Okay, so just let's talk a little bit more about, the reports suggesting that you're going to be focusing on investing your operating leverage gains in brand development. Is that something that you feel that you're lagging in currently, and how incrementally positive do you think that's going to be in the larger scheme of things?
See, one thing we've seen in the last few years is a lot of noise thanks to advertising that we've seen, blitzkriegs by largely e-commerce firms and so on. So it therefore tends to overshadow traditional brands like ours. And therefore we have decided that in certain segments of ours, like the eyewear business, for example, we are also getting into distribution. It makes a lot of sense to invest a little disproportionately in the short term so that the brand gets to be far more powerful than it has been in the past. So yes, in the case of eyewear, for sure, we are looking at increasing our ad spend, but it's not the same with the other two divisions. Our brand metrics on both Tanishq as a brand for jewelry and Titan, Fast Track, Sonata in the watch segment has been good. I think therefore I don't see us increasing any, and that of course would be the bulk of the advertising spend as well. I don't think we will be increasing our spend there disproportionately, because I think we are quite okay on the metrics now. But eyewear is one area where we would be investing more.
Okay. Mr. Subramaniam, one question, final question from mine at least. Aside of jewelry, wherein I don't know if down trading is really possible, for the other segments and maybe for the industry at large, I know we started off the conversation there with probably some bit of this point. Have we seen customers preferring lower price points? The same customers who earlier were maybe not price agnostic but comfortable buying at a higher price point, are those customers starting to become more conscious of the price points and starting to downtrade?
I don't think we are seeing that, at least as of now. Not much of evidence of that, because if you look at my average ticket size, it's been holding on to what we've been doing over the last year and a half. And there has been a significant increase in that as well, because of course our focus on wedding jewelry and high value studded jewelry means that average ticket size will grow, and we have seen that trend to continue. So I don't believe that is an issue. And secondly, I think jewelry is a little different from other consumer durables in the sense that it's also a store of wealth. So when people put in more money into jewelry, they are also at the back of their mind, they have the fact that this is something which is not going to erode in value. So I don't think, therefore, there may be a tendency for people to trade down in jewelry as much as would be in the other categories.
Just one final question, Mr. Subramaniam. Could you leave us with the margin guidance?
That's something I won't give. See, we have stated our position clearly that we are more focused on the top line growth. And I talked about the numbers, 50,000 crores consumer price and so on and so forth. I think what we are looking at doing is to get that rather than look at a margin as a goal. Now, having said that, you have seen over the last 2-3 years the improvement in the margins, which have been substantial. Okay, that's coming out very clearly out of operating leverage. So I believe that if we were to actually grow at something like a ballpark of 15 to 20% every year from now onwards, there has to be a benefit on the margins as well. But that's not the main goal. The main goal is to actually get the top line more.
Okay, we'll leave it at that. Mr. Subramaniam, thank you so much for taking the time out, and all the best for the quarter. We'll, of course, look forward to talking to you after your results are out.
Thank you.
That's Titan, 1 lakh crores of market cap, and the management sounding confident. Irrespective of what happens in the space, they're confident about their strategy. Now, stock marginally off in the session today. Take a very quick break. Come back with a conversation with the management of Power Finance Corporation. This is Indian Open. Stay tuned to Bloomberg Live.